Welcome to The Explainer. Today, we're taking Amerant Bancorp's latest earnings report and, well, stripping away the jargon to tell you the real story. If you've ever stared at a dense 9-page banking release filled with acronyms and endless data tables and wondered what it all actually means for the health of the bank, you're in the right place. We're going to break down their Q2 2026 results slide by slide so you can see exactly how this institution is operating right now.
All right, let's just jump right in with the massive hook for Q2. $21 million. That is the net income attributable to the company for the second quarter of 2026. Right out of the gate, this number screams that we're looking at a highly profitable quarter. But, a number in a vacuum doesn't actually tell us much about the underlying strategy, does it? We need to know exactly how they got there and what the leaders steering the ship have to say about it.
So how'd they pull that off? CEO Carlos Iafigliola lays it out pretty clearly right here. His blueprint for this quarter relied on 3 specific levers: balance sheet growth, solid deposit generation, and disciplined expense management. And these aren't just corporate buzzwords. They are the exact practical actions a bank takes to drive that $21 million outcome. He's essentially handing us the map for how they achieved this success.
To make this dense report super digestible, we'll follow this quick 4-step roadmap. 1. Q2 profitability and headlines. 2. Fueling growth with deposits. 3. Credit health and risk. And finally, 4. Returns to shareholders.
Okay, starting with Section 1, Q2 profitability and headlines. Let's look under the hood.
Just as a really quick refresher before we hit the numbers, Amerant is a bank holding company that's been around for over 45 years. They operate 23 banking centers, that's 21 down in South Florida and 2 in Tampa, providing a whole range of deposit, credit, and wealth management services. So as we look at all these metrics, keep in mind that this is a regional institution deeply embedded in the Florida economy.
Now, look at this trajectory. It's not just that they made money, they really accelerated their earnings, jumping from $17.9 million in the first quarter of 2026 up to $21.0 million in the second quarter. To put that in perspective, in per-share terms, that's an increase from 44 cents to 53 cents per diluted share. That's a very noticeable jump in just a 3-month window, telling us their operational momentum is pointing aggressively upward. Oh, and total assets? Those ticked up by 3.9% to $10.3 billion.
Before we look at the next metric, let's quickly ground ourselves on return on equity, or ROE. You probably know it measures profit efficiency against shareholder capital. But what really matters today is how effectively Amerant's management actually pulled this specific lever during Q2. Because it's one thing to grow your overall income, but are you doing it efficiently with the capital you actually have?
And here is the kicker. Amerant's ROE jumped from 7.63% in Q1 to a really impressive 9.23% in Q2. This absolutely proves their underlying profitability is strengthening. They aren't just getting bigger by taking on bloat, they're actually becoming a leaner, more efficient profit-generating machine. And it's a similar story with the return on average assets, or ROA, which also increased from 0.73% to 0.84%. Literally everything is trending in the right direction here.
Moving right along to Section 2, fueling growth with deposits.
In banking, your deposits are essentially the lifeblood that allows you to make loans and drive revenue, and this chart brilliantly illustrates how Amerant is funding its operations. Core deposits grew from $5.9 billion in Q1 to $6.4 billion in Q2. Right now, at a time when a lot of banks are fighting tooth and nail just to maintain their deposit base, Amerant is showing undeniable, robust expansion in their foundational funding. That $500 million jump? That is a massive 9.4% surge in core deposits in just 3 months. But here's what you really need to take away from this. It's about where that growth came from. The CEO specifically noted that this was heavily driven by non-interest-bearing deposits. Why is that a game changer? Because non-interest-bearing deposits are basically free money for the bank to use. It drastically lowers their overall cost of funding, which, of course, feeds right back into those expanding profit margins we were just talking about.
Okay, on to Section 3, credit health and risk.
Making money is fantastic, but institutional health relies on playing good defense. So as Amerant's balance sheet swells past that $10 billion mark, we really have to ask ourselves, just how safe are these assets? Are they protecting their money and making sure the loans they've handed out will actually get paid back? Because, let's be honest, a bank can look incredibly profitable on paper right up until a wave of bad loans wipes out their capital. So let's check their asset quality.
Well, look at this cascading drop in risky loans. This is a highly meaningful cleanup of their credit profile. Across the board, things are dropping. Non-performing assets,
down 2.6% to $186.6 million. Classified loans saw a huge drop, down 14.7% to $273.1 million. And those special mention loans, the ones that need to be watched like a hawk, they plunged by almost 26%, down to $109.8 million. The report points out that these decreases were primarily driven by strategic loan sales and payoffs during the quarter. So management isn't just sitting around hoping bad loans get better, they're actively clearing risk off the board.
Finally, Section 4, Returns to Shareholders. We've seen higher profits, surging deposits, and decreasing risk. But what does all this institutional health actually mean for the owners of the bank? Well, management is directly rewarding investors on two fronts. First, they actively repurchased 690,000 shares at a weighted average of $23.29, deploying about $16.1 million in capital to reduce supply and boost share value. Second, they maintained their steady quarterly cash dividend of 9 cents per share. They are literally putting cash back into the owners' pockets.
As we wrap up this explainer, we've basically seen a masterclass in a clean quarter for Amerant Bancorp. Their income is up, their core deposits surged by over 9%, they aggressively scrubbed their loan portfolio, and they returned serious capital to their shareholders. So I'll leave you with this thought. With such strong vital signs and a newly fortified balance sheet this quarter, what bold strategic moves might Amerant make next to capture even more of the Florida market? Thanks so much for learning with us today, and stay curious.